When I get asked, Brian, what's it like being in real estate your whole life? My answer is always the same. In real estate, you're surrounded by crooks, thieves, people that commit fraud on a daily basis, and you find out your friends are all liars. But there's a downside to it also. Today, I want to look at arrived homes, or just arrived. Arrived is a fractionalized, what I would call a fractionalized real estate platform, meaning it allows people to come together in groups and buy real estate, small pieces of it together. Now, Arrived, it's not tokenized, it's not on the blockchain. Technically, what they're doing is each property becomes a REIT. And then you buy into it, you buy shares of a series LLC. If you need to know what that is, just look it up. And you're basically, each property that Arrived sources it basically becomes a REIT. And then that's how they're taxing it. There's a lot of hopium going on. There's a lot of projection by the company in the future that these things are going to be, accurately classified by the IRS. So when you read their documents, there's a little bit of, like I said, a little bit of hopium going on. They're not exactly sure what's going to happen in the future. That's okay. This is a new space, and we're not talking millions of dollars investments here. Usually people are putting small fractions of money, $500, $200, a few $100s. Not that that's not important, and that is a risk, but it's just, I see these platforms that are popping up as a little, they're sort of in the crypto blockchain space, sort of gambly. Maybe not, maybe it is technically real estate, but I see some problems in Arrived. One thing I really like about Arrived, and this is something that I think is sort of unique compared to some of the other blockchain and tokenized platforms that are coming out right now. Each property, they register them with the SEC as a security. They go through the process. So this property, whatever property they have, property A, they take that property and they go through the registration process to register that with the SEC as a security, and then it becomes a REIT. When they go through that process of registering it with the SEC, now it's a registered security, which means anyone can buy in that's over 18 years old. You don't have to be an accredited investor. It's open for everybody. So 18 and over, as long as you don't invest more than 10% of your income, you can be investing with Arrived. They invest, or you invest if you invested with Arrived. They have short-term rental properties that you can purchase into, and they have long-term rental properties. I will say that the long-term rental properties are a better deal. They're also taxed better. They're taxed as a REIT. The short-term rentals are not taxed as a REIT because that's considered an active investment. So know that going in. Also, you guys, Airbnbs and short-term rentals have an uncertain future. They're getting a lot of bad news in the press. They're oversaturated in the market. I think I read somewhere 50% of all Airbnbs were purchased during COVID the last couple of years. So that's kind of an issue there that you have a lot of these on the market already. Also, a lot of these short-term rentals are in luxury markets, and luxury brands and luxury properties in the next year are going to be getting wrecked. And they have been in the last year. That's the first place that prices are going to take a big, big drop. Luxury properties in touristy destination places. But that doesn't mean they're not a good investment all the time. But what I see on Arrived, I'm not really happy with what I'm seeing. Now, the first thing I did, I just looked up Arrived Homes and who's funded it and how much money they raised when they started. And as you can see right here, they raised $162 million in funding. Now, that's a lot of money, and that's really important. That money is not going towards you, the investor. This is money they raised from investors to set up the company. Now, the reason I say this is important is because that money has to be paid back. So Arrived operates as a public benefit corporation. I see that as sort of a virtue signaling issue, but it's a legal term and it's how they're operating. They say that they have 4 stakeholders. Those stakeholders are the investors, us, who are buying into the properties. Number 2, their tenants. Those are their stakeholders. Number 3, the communities they invest in. And number 4, their employees. Now, I call BS on this right up front because when you owe $160 million to investors, that's your stakeholder. Take that for what it means. If someone's doing a lot of virtue signaling out there, you got to look at what's going on going out the back door. The one thing that I don't like about Arrived is that they don't have any liquidity, meaning it's Hotel California. Once you get into a property, you are not getting out for a 5 to 7 year period, and that's probably going to be longer. So you can't sell your shares between now and then. They do not have a marketplace to trade shares. You're buying and you're locked in. One thing that I do like about Arrived, and I really like this, is that they do offer some properties with leverage. And some of them they buy free and clear, but they'll have leverage opportunities coming up, meaning that when it's owned free and clear, that they're going to be putting some financing in there, and then that financing should go to the shareholders of the property. But you guys, the beautiful thing about real estate and the beautiful thing about leverage is this. take a house that you could buy for $300,000. Let's say you put $100,000 down and you owe $200,000 on the property. That's 3-to-1 leverage. What that means is with 3-to-1 leverage, let's say you bought that property 100% free and clear for $300,000 cash. Now let's say that property goes up 20% in value. You've made 20% on your $300,000. Okay, that's great. But look at it with leverage. Let's say you put $100,000 down, you have that 3-to-1 leverage I'm talking about, and the property goes up 20% in value. To you, with 3-to-1 leverage, you have a 60% return. That is huge. That is how people get rich in real estate, is using leverage, because you're leveraging large pieces of real estate with small pieces of money, but your gain is based on the large piece of real estate. So it's huge. Leveraging properties is how you build wealth in real estate. So Arrived has leverage, and I love that. Arrived has fees that will kill you, and I hate that. So let's go ahead and take a look at the marketplace. Now, their website is arrived.com. As you can see, this is the front page of the website right here. But what you really want to see is, let's go ahead and look at the marketplace, and I'll show you the properties and how this works. So you can see here's the marketplace right here. It's clean. I'm using obviously desktop. I don't think they have a mobile app. It's just going to be desktop. I like this clean interface. You can see the properties. Here's the properties all listed here. They do have a lot of properties. Once it's fully funded, you can't get in. So actually one just dropped off. So right now trending, they have this one here called the Alta that they're looking for investors on. This is a very expensive vacation rental. I'm not going to drop into that one. Like I said, I don't like vacation rentals on this platform at all. I don't like what their fee structure is and what they're doing with the fee structure. But you can you can filter your properties up here by single family, residential, vacation rentals, leveraged, rented, newly built. So let's just pick one. We're going to pick the high key. We're going to look at this one right here. They have pictures of the property. That's nice. There's a little financial description going on here. It tells you how many investors. It's 100% funded, so we can't get in. They've got 541 investors. Tenant leasing process. It's under contract, so it's not leased right now. They're hoping to have a dividend in October. They're expecting a 4.1% per year dividend yield. And then they have some stuff here on historic market returns. You can completely just discount this because this is just historic. It has nothing to do with reality. And let me tell you, the last 2 years in real estate had nothing to do with reality. And this is including the last 2 years. So just ignore this section completely. Now, I like this strategic refinance candidate. This property may seek to add up to 70% in leverage through a strategic refinancing. Learn more. So that's nice if they decide to leverage that property. The stakeholders, the shareholders who bought in 100% financing will be distributed some of that money, probably minus some fees. Now, this is, honestly, you guys, when I started making this video, I was really excited about Arrived. I like a lot of things about their platform. I do see that they're building a community. They've got some great real estate videos on investing and taxes I enjoyed listening to. Then I get here, property purchase price, $244,000. I'm going to round up numbers just so you guys know. $245,000. Total invested, $290,000. That's $50,000 over retail price. Because I looked this up on Zillow, you guys. $244,000 was the retail price. Actually, it's a little bit less than that. It's $240,000. That's a huge difference right there. Now, property improvements and cash reserves, $18,000. Closing costs, offering costs, holding costs, $18,000. Arrived sourcing fee one time, $8,000. This really shocked me, you guys, when I was looking at this. I decided to dig a little deeper in their documents, and it actually gets worse. I will say that one thing I do not like about Arrived is they're not doing a lot of due diligence for their documents that we're allowed to see. We can't see the property inspection report. We don't get to see the closing statement. I don't get to see anything else about the property. Other than when I look deeper, and I'll show you in a minute, you can see the purchase and sale agreement and the assignment contract, and that's it. And that is all built in here down in this under the documents. If you click on these little squares, they all go to the same document. They just go to a different part of that document. So I pulled it up. Now, this right here, Arrived Series High Key, you can see this right here. This is the financial breakdown of the property. Acquisition costs, $244,000, $245,000. Property improvements, $8,000, fine. Operating and capital reserves, $10,150. Okay, they're going to hold some money back for capital reserves, that's fine. Brokerage fee of $2,900. You guys, that is not on the sale commission of the property that's listed. That is added on to the sale price of the property. Acquisition expenses, $5,170. Offering expenses, $5,799. Financing and holding costs, $4,780. Sourcing fee, $85.60. Acquisition expenses, number 3 is title insurance, appraisal costs, closing costs, mortgage. Fine. I don't have a problem with acquisition expenses. This $2,900 brokerage fee, offering expenses at $57.99, I have a problem with both those. Financing and holding costs, I don't have a problem with. They're buying these properties free and clear. And during the holding period, the SEC sort of approval holding period, I know there's going to be costs associated with that, and that's fine. And then this sourcing fee of $85.60. Okay, let's just do some math on the fees, you guys. So let me show you something right here. When you dig into the documents on this property, this is the purchase and sale agreement. If you look right here on the purchase and sale agreement under closing information, it talks about the commissions. They've blacked out who this commission is going to. They're going to claim privacy. That's bullshit. They just don't want you to know who that commission is going to. That's a 3% commission. That is not the same as that brokerage fee I just showed you on that other disclosure. This is a much larger fee. They're not disclosing this. So that other fee is added on top of this. I think that's probably what they're calling this right here, which is their assignment agreement, where they basically arrived, buys the property, and then assigns it to the Series LLC. And I have a question, is that fee, that brokerage fee, the assignment fee? They're not disclosing that property. I think that's an assignment fee. If it's not even an assignment fee, it's just a brokerage fee. What for? They've already received that 3%. So they're charging fees on top of fees. Then you have this offering expenses at $57.99. And then you have the sourcing fee at $85.60. That brings total fees up to almost $25,000. These are additional fees. These are TBFs. Total bullshit fees of almost $25,000 that they're adding on top of the property that you as the investor are going to have to absorb. This is a major problem. This is why I said pay attention to who's funding this. When you raise $160 million, that $160 million wants to be paid back. And this is how they're paying that back. Another way that Arrived makes money, and I think this is kind of shady, they find a property management company to manage the properties. Property management companies typically charge 8 to 10%. In their documents, Arrived states that they pay an 8% management fee, but that some of that fee might be going back to them. I looked in their documents and look at this right here. Exhibit C of their property management agreement says the management fee is 6% of gross revenue. So that means they're taking a 2% fee of gross revenue. That's a problem. The reason I see that as a problem is good property managers are key to a successful rental property. And if you're going cheap on your property manager, they're not going to care about the property as much. And they're going cheap on the property managers by paying them 6% and taking the 2% fee. I don't like that. Because what do I get for my 2%? I'd rather have that go to the property management company that would do better job of managing the property, of picking tenants and doing all that so I can get a better return on my investment than cheaping out and going cheap on the property management company. They get resentful because they're not making as much on the other property they're managing, and they're just going to manage it according to what they're getting paid. I don't like that. I think that's a cheap-ass problem, and I think that as investors, this is a problem. Another fee they stack on, and I'm not even including in this list here, is they charge a 0.6% fee to assets under management. So, but it's not 0.6% of the rents, is 0.6% of the property is paid out to Arrived on a quarterly basis. Well, it's yearly, but they pay out 25% of that quarterly as an asset under management fee. So that's in addition to the other fees, in addition to the 2% of the property management fee. They get this asset under management fee, and God knows what they're going to charge on the disposition if they decide to sell. Now, one thing about Arrived is as an investor, you don't have any choices. This is a REIT. You're just going to sit back. You don't vote on anything. You don't make any decisions. When it comes time to sell, it will be up to Arrived to decide if you're going to sell that property or not. It will be up to them to decide everything about tenants. It will be up to them to decide basically whether or not in 5 years this makes sense to sell. They won't make sense to sell because I'm going to go over the numbers on one right now. I'll just compare this property we looked at, the high key, to if I sold it to you as a broker. I'm a broker. If I had sold this to you as a broker and you're the investor, let's go over those numbers on how this would work. There would be a $245,000 purchase price because that's where this listed at. 20% down would be approximately, they say $48,000, $50,000 down payment, which means you'd be getting a mortgage for about $200,000. At 6.5% interest, that's about $1,264 a month. taxes and insurance brings you up approximately to around $1,500 a month. Then I'm going to add another $200 a month for expenses and property management, bringing it to about $1,700 a month. They say they can rent this property out for $1,695, or they say $1,700 a month. So as an investor, if I sold you this property, you're going to put almost $50,000 down. You're going to receive a little bit of monthly cash flow, but with your expenses and stuff, let's just say it's going to be a break even on the cash flow. So you're not really going to make any money per month because you're going to have some expenses. You will get depreciation, but I'm not even going to talk about that in here other than to say you would get a depreciation expense, which is huge on your taxes. So not even including depreciation, you're going to buy this property. You're going to have basically zero cash flow for the next 5 years, but let's say it appreciates at 5% over the next 5 years. That brings your value up to about $312,000. Now, let's say you decide to sell it. That means your closing costs are about $25,000. Let's say about 8% is going to be typical closing costs. I don't know about your market. In my market, I'm at 10%, but I'm in Washington and we have a 2% excise tax. So let's just take that out. Say you've got 8%. So that's the $25,000 of closing costs, which brings your net to about $287,000. So you bought this property for $245,000. That's a $42,000 profit. And you may and some depreciation expenses to offset some of your other taxes. And that's typically a typical real estate investment. Put $50,000 down with 5% appreciation, 5 years, you're going to about double your down payment. That's a good return. That's what you expect in real estate. Now, if you notice one problem here on this with the high key, let's say in 5 years you decide to sell this property, and let's just say it does go up by 5% a year over the next 5 years. We don't know if that's going to happen in either scenario. Let's just say it does go up that over the next 5 years. Now, how does it look when Arrived goes to sell it? I can tell you right now, you're upside down because remember, $312,000 sale price minus 8% in closing costs, it's $287,000. This property, you're into it for $290,000 today. So that means in 5 years, if it goes up 5% a year, you are going to be at break even. You won't make any capital gain. You won't have any taxes to pay. You'll have received maybe a little bit of depreciation expenses on your 1099 div that you're going to get from these guys as a REIT. And that's it. On this one, if they don't leverage it, you'll get some distributions on the rental. They distribute the rental income quarterly, which I think is kind of shady, but they distribute that quarterly. So you would get some of that distribution out on the rent. But when it goes to sell, this property, you guys, anyone that's into this property right now, I feel sorry for you because I really don't think you're going to get out from underneath it. I ran the same calculation on a bunch of properties in this platform, and it's all the same. These fees are absolutely going to kill people when they go to exit. What's going to happen is in 5 years, Arrived is going to say, well, due to market conditions, we can't sell it now. We're just going to hold it for 2 more years. I guarantee you these properties are going to be held for at least 7 years just to get people out from underneath it. I hate to be negative about a platform, you guys. I have to be honest, though. This is what's going on my channel, is I want to show you guys what to do and what not to do with the emerging market of blockchain and tokenized real estate and all of that as it's getting smaller for regular people. When I mean getting smaller, I mean the dollar amount that you can invest is getting smaller and more accessible to everybody. But some of these platforms are going to be kind of shady. Arrived, I think, now, good and bad. I like what they're doing with the SEC of registering each property. I like that. I actually like their software and their platform. I think their disclosures could be better, and I think their fee structure needs to be completely realigned. That being said, you guys, I do have a link in the description below if you want to check it out. It is an affiliate link, so I will say if you do buy on that, I'll make a little bit of money. And that sounds kind of funny because I'm not necessarily recommending the platform right now. But I'm going to put that link down there so you can check it out. I would recommend checking it out, and then I would recommend holding off a little bit. Just a little bit, because if they can put into place a secondary marketplace coming up so that you can get out of your properties and there's trading, then I think this is valuable and worth looking at. When there's a secondary market, if they can get liquidity, you're going to get a 20 to 30% liquidity bump on your equity, and that's how you can get out of these properties if people start trading them. So look for number 1, Arrived forming its own marketplace. Number 2, look for the crypto world, the blockchain world to start offering sort of tradable assets of tokenized real estate. And if they can put NFTs or assign these values in that space and open that liquidity up for bigger trading, then I think it's sky's the limit for this stuff. But for right now, as it sits, I would hold off on Arrived. Now, if you do want to look at another platform that works like Arrived, but has a little bit better fee structure, click right here and watch this video. If you're interested in a platform that does something like this but is blockchain and tokenized, then watch the video right here, and that will tell you about that opportunity, which I love this one.